So a little bit ago, I decided to fund a Robinhood account with $100 to show you guys you don't need thousands of dollars to get started with swing trading. All you need is a solid strategy. For those of you that don't know who I am, my name is Carter and I'm a full-time swing trader and I have been over the past 6 years. And in today's video, we are going to be doing an update on my small account challenge that I started to show you guys you don't need millions or thousands to get started with trading. You just need to focus on a solid strategy. So guys, I hope you guys all enjoy it. If you guys do, hit that like button and subscribe. Also, exciting news, we have a brand new swing trading course where we actually talk about how to find these opportunities, my strategies, my mindset. There's live streams, there's quizzes, there's lectures. It's absolutely fantastic. I'll put it down below. You guys can use code YouTube to get 20% off. And there's only a couple of spots left with that code. So make sure you guys sign up right now. And I know a lot of people cringe when they think of courses, but hey, if you want to invest in your future, I highly recommend it down below. But guys, let's dive into this. Let's go. So yeah, a little bit ago, I decided to fund a Robinhood account with $100. And I know Robinhood, it's disgusting. I know. But what I actually do is I use Robinhood for all of my buying and selling. When I actually evaluate stocks and I look at charting, I use a broker called Moo. It's a lot easier, in my opinion, to grasp and find support, find resistance, and understand different indicators, and kind of that's where my larger account sits. So it's just a lot easier for me to just trade with Robinhood and then use Moo for all my scanning. All right, now let's talk about how much money I made with $100. Well, you guys know last week we ended the week a little near and around $600-ish, around that range, $640, and we are now over $720, which is absolutely fantastic. We are creeping our way close to that $1,000 mark, which is incredible. And guys, the thing about this is a lot of people think that trading, it's all home run hits, right? You're making 2, 3, 400% returns. No. In order to be successful when it comes with trading in the markets, it's those base hits. It's those 1, 2, 3% profits that are gonna make or break a full-time trader. And that's what I teach, on this channel and in my course. It's not how to turn $100 into $100,000. It's how to, turn $100 into $105 and then turn that $105 into $110 and just slowly compound your account. That's the biggest thing. If you're already a profitable trader, the only thing that's separating you from making more money isn't your strategy, it's just your account size. So you just got to focus on that compound interest. That compounding effect will add up. All right, now let's actually turn to the computer and show you guys some of my trades. Let's go. Alrighty guys, so we are up and loaded here on Moo. Like I said, this is the broker I use. I highly recommend them. I'll put them down below. You guys can sign up. But guys, all right, what do I look for swing trading? This is a very, very common question I get asked. And very, very simple. I don't overcomplicate my swing trades. Pretty much what I look for is a stock on an upward trend that has sold off down to levels of some sort of support. Now, the support, in my opinion, could be a price support, could be a moving average line, or, whatever I feel fit. Looking at certain indicators. So looking back, we'll see that, RMBS has this tendency of getting buying pressure around this 90-day moving average line. If you just watch it, you guys will see, right? It kind of falls below on this earnings. Once the stock falls below a moving average line, we see tendencies of it now acting as resistance. And that's kind of what we see here for a little bit. It just kind of consolidates, it breaks above it, uses it as support, and just kind of starts trading, below it and above it. Then recently we had this amazing buying pressure off this other earnings where it went from about $50 all the way to about $70 in a matter of a month. Now, it did start selling off and kind of going flat. Now, as we look at it here, you guys will see that on top of that, you'll notice we've gotten buying pressure at about $63, establishing some level of support, and then it pushed back up to $70, consolidated, went back down to that $60 level again. Okay, right where that old support was. On top of that, we also had another indicator, something called that 90-day moving average line, came in contact with it again, as well as something called the relative strength index, which is the RSI line, which pretty much determines if a stock is overvalued or undervalued. And you guys will see that every time it's pretty much below, 28 to a 30, we get tendencies of getting buying pressure, right? As we zoom out, this was the last time in this zone where it came in, we got buying pressure. So we understood that when it falls below that price, below that point on the RSI, we get buying pressure, as well as two indicators, that price support, as well as that moving average line support. So we understood that this was a very confident trade. We could hop in at 63, set our stop loss at 60, risk about $3 to possibly make upwards of $10. And that's exactly what we've seen. And it did have this amazing resistant breakout where it went up about 6% in a single day. Right now we're doing a trailing stop loss, which is probably the best way to go about this. And pretty much what that does is as the stock climbs up, you're just adjusting that stop loss and keep moving it higher and higher and higher. This stock is already up quite a bit. So our stop loss is near and around $71. So if it does sell off, we're going to be still up handsomely on this trade. Now, some other examples that I do want to show you guys is ticker symbol ICLR. ICLR was another textbook trade. You guys will see we had that general trend line support, that yellow line, as well as that 200-day moving average line. So not the 90 with this one, but that red line, which is the 200-day moving average line. The 200-day moving average line will always be stronger than the 90-day moving average line. So it comes in contact. What do we see? Great buying pressure from 250 or about 247 all the way up to about 260, setting our stop loss below 240. So we're pretty much risking, about $8 to possibly make $20, which is a textbook trade, textbook swing trade and risk management skill. So I do think we'll slowly start seeing some selling pressure, to be honest with you, with this, just because of that moving average line, coming in contact. But, look at this. Every time this thing is at about a 15 on the RSI, let's go back and look. So every time it's undervalued, right? Let's go ahead and look. All right, so one right here. And what happened? Great buying pressure. So this is why using indicators is one of the more important things when it comes to trading, is you need to understand what's going on with your stocks. And that's why having good risk management, having good indicators that you understand and not overcomplicating your trade is going to be how you become a successful trader. And these were some of the trades that I did. And you guys are more than welcome to go watch our last live stream where we actually called these stocks out. So make sure you guys check that out, as well as check out my course. And this is how we made a bunch of money growing small accounts, is by just doing these small trades that slowly add up. All right, guys, I hope you guys enjoyed it. If you guys did, hit that like button and subscribe, and we'll see you guys later in the next one. Don't forget to check out my course, and we'll see you guys tomorrow. If you guys are part of the group, you guys will see me go live with the private live stream, so we'll see you tomorrow. Take care.